So today we're going to talk about how to spot and trade supply and demand on the 5-minute chart. If you're not familiar with this channel, we talk about ways to simplify your trading and free you from the belief that trading can't be done. Today we're going to talk about how to identify a higher time frame bias, how to mark key areas, finding trades on the 5-minute chart using supply and demand. Now, why would we want a higher time frame bias when we're scalping the market? Well, when we have a directional bias, this is going to help us decide if we want to buy or sell until we reach the next point where we expect price to change direction. By doing so, this can put the odds in your favor, because the goal is to be consistently profitable, and you're going to suffer wins and losses, and anything you can do to put the odds in your favor is what you're trying to do. Now, when we're looking at this is Euro USD on the 4-hour chart, and when you're looking at this, how would you decide to get in on a buy or a sell on a lower time frame? Where would you decide to do this when you're looking at this? Because there's areas that price changes direction, but how do you know when is the best time? What we have here is an area of demand marked off, and I've got the wick marked off across as the target area. So I want to see price come into that area. I don't want to see price close into the demand area and continue to go past it. I seen that price tested the area, closed above it, and this was the candle from 5 to 9 a.m. Eastern Standard Time. So any trading opportunities I would be looking for would be from 9 o'clock onward. I target the high. This is simple enough, and this happens on other time frames as well. But now what we do is we go down to the 5-minute chart and take a look to see if there was any opportunities. So when we go here, you can see there's 9 o'clock, and we're looking for trading opportunities afterwards. You could be looking for buys and sells, but you're not this time. You know that price is likely to go up, so those are the only type of trades you're looking for up to the area that you had marked off. And what you're doing here is identifying areas where price is reacting and seeing if it's a spot that you should enter in on a trade. So when we're looking at all of this, we can see that this was an area of demand here. And what happened was price came down, tested the area, and then gave us a candle confirmation that it may be going up. Doesn't mean that it will, but this is what we're looking for. You target the high, your stop loss just below, and you can see the risk to reward was 5.21. And this trade here took second here, 2 hours and 35 minutes to play out. And what do we see? We see a second opportunity that could have happened as well. So when I'm looking at this, I'm paying attention. Usually you want to see several candles pushing in one direction or another before considering it a good trading opportunity. Now, you see how price came down, tested the area. You don't know which area it's going to test, so you're paying attention to every candle that it's interacting with to the left of the chart. And you can see clearly here. Price came to the area, tested it, did not close below it, and we had an engulfing pattern right there. And at this point, you would have gotten in on the trade, targeted the high, stop loss just below. And the risk to reward was 2.92. And this trade was 1 hour and 25 minutes. So this happens over and over again. 2 hours and 35 minutes total for 2 trades. One was 2.92, the other one was 5.21. Not bad for a few hours. And the first trade was taken at 9:25 in the morning. The second one was at 10:35. So both during the New York session. And this happens over and over again. It's not always going to work out, but you can see how we formed a decision from looking at the higher time frame and took trades only in that direction. Now, if price decided to continue going down further on the 4-hour, analysis would have been incorrect and we would have lost the trades. If I would have seen it on the 4-hour that I was losing a trade and I noticed that it finally closed below, I probably wouldn't be looking for any more buying opportunities because now it's invalidated my analysis, and I'll be waiting until it reaches the next point of interest, reacting to another area of supply or demand, and looking to take an entry in the opposite direction when the opportunity presents itself. If you have any questions about this, leave me a comment, and until next time, bye for now.